Hi, this is Kerry Artak with Wicked Stocks, bringing you the Daily SPY Report for Wednesday, October 13th. Please click on the like and or subscribe button. Subscribing will actually provide you notifications from YouTube that will tell you when these reports are ready. I'm doing them every day. So the Daily SPY Report typically gets sent out in the afternoon for the next day. You could also go to the Wicked Stocks website, wickedstocks.com, and actually fill out that basic membership, the free membership, and that will also provide you a daily email each and every time the Daily SPY Report has been uploaded and is ready to view. Let's jump into Wednesday's trade. The numbers have changed ever so slightly, but the dynamic has not. Last week, Thursday, we came very close to testing what at that point was a quick target, 2 to 3, 3 to 5 days. We did it in a day, really, where we pushed into the low 440s, that 441.42 to 441.72 convergence of a meaningful channel top and descending two-thirds speed line, able to contain weekly buying pressures. It has essentially performed that function as of last Thursday, and once tested, the market then able to fall back, likely to fall back, susceptible to falling back to the 429.42 speed line. And in fact, holding below the low 440s resistance will keep that 413.82 longer-term support in reach over the next several weeks. So this is nothing new. The concept is the same. The numbers have changed ever so slightly. For the day itself, take a look at our support and resistance levels, and you can see these minor points that all are adjacent to the present price location of 433.62 or so. And I can tell you, most of them are just Fibonacci retracement levels right now. That 432.21, the lowest number, is actually a 5/8 Fibonacci downside from last week's low to last week's high. Those are the extremes that we've been trading inside of ever since. And so on the way down, 432.21, a 5/8 downside pullback. Tuesday's low, yesterday's low was 432.43. We came close to it. It is a level that can contain intraday activity. All of those minor points are well suited for aggressive day traders. And by the way, on the way up from yesterday's low, back up, following Thursday's high, we also have a 3/8 upside Fibonacci, 35.51, the 50% at 37.06, and the 5/8 at 38.15. All well suited for aggressive day traders, but the overall dynamic remains the same. Holding below that low 440s will keep 429.42 in reach as a 3 to 5 day downside target. And we are really in the, yesterday was the fourth day following the near test of that low 440s resistance. So today may well be the day that we test the 429.42 speed line. The S&P has this sort of 3 to 5 day dynamic. You can get 3 to 5 negative days in a row or positive days in a row before the market sort of rejects that tempo. And so we could test 429.42 today and then turn back up through the rest of the week and into next. From that level at 429.42, the market can within 3 to 5 days rally back into the lower 440s quite easily. But if we close below 429.42, then we have, a secondary sell signal, essentially. For the day itself, if we break 429.42, we have the 426.36 low from last week and the 424.61 trend line across those lows over the last few weeks. You can see in the support resistance column that 426.36, last week's low, is just a minor point. That is in reach if we break 429.42 today. And we could, especially if we break early 429.42, actually continue all the way south to 424.61 within the day. I call it a 1 to 2 day target, but we may well reach it today if we break 29.42 early. The 424.61 trend line able to contain daily selling pressures. But overall, as I say and have been saying, closing today below 429.42 would indicate that 419.60 channel bottom within probably 2 to 3 days, which is dropping daily, and a week from tomorrow actually intersects with that 413.82 longer term support level. So that is a narrowing range of support. Call it a 3 to 5 day downside objective if we close below 429.42. The 413.82 to 1960 region able to absorb selling through November trade, quite possibly the balance of the year. And from there, we can turn up to new highs and within a month or two, actually reach that 465.62 long-term trend line. And you can see that actually well illustrated here on the longer-term chart. Let's talk upside today. I don't anticipate seeing 441.42. If we push through that minor point at 438.15, then yeah, I think it's likely, but I don't know if the market's going to do that today. I think just merely closing positive on the day would heighten the likelihood that by Friday's close, we could actually test that 441.42 to 41.72 area where by that point in time we could top out perhaps through next week, and still holding below it will keep 413.82 in reach within several weeks. But if we close above 441.72 today, or that area as it drops ever so gradually at any point between now and, say, the end of next week, and then we actually have a good indication for a good October low, bullish continuation then expected over the next several weeks. It could be now 3 to 5 as these levels pull away from each other. The lower 440s are dropping ever so gradually, and that 465.62 target is rising. So if we close above 441.72, I would maintain a 465.62 objective, but rather than 2 to 3 weeks, it may well take into later November to achieve. On the way up, I'll show you this again, 447.05, that extreme channel top, well suited to contain daily highs when tested. And the 454.05 high is really a 3 to 5 day, maybe a 2-week target above 441.72. But as I say, overall, closing above 441.72 should yield 465.62 over the following 3 to 5 weeks. I'm going to leave you with this, the support and resistance level. But before I check out, please click like, please click subscribe. I love the fact that the subscription base is growing. It helps me out a lot. And I think I'll just leave you with this for 15 seconds, and you and I will talk tomorrow. That's all I got.